The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the June 25th wonderful Wednesday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a terrific Tuesday. Let's make sure that you and I, that we do all that we can do to have a wonderful Wednesday. And I'll do everything I can during the next couple of hours to teach you how to master the tools for trading. And that includes the tools of the mind, because when you and I, when we master the tools of our mind, we begin to think like a strategist. And this is really important as it applies to really every aspect of our life, especially trading. Now, some of the tactics we use in technical analysis are A to B equals CD patterns, Fibonacci expansion and retracements, Gartley butterfly patterns, and, of course, Japanese candlesticks, because these are the signs that the bulls and the bears make for you and I each and every trading session. And unlike most traders who focus on tactics only, you and I know that to really achieve our goals and our dreams, we've got to always think like a strategist. Now, the real key to trading and investing, the real key to get our money to work harder for us than we do for it, is to have a strategy. And that's what I call Mastering Probability, which is also the name of my daily newsletter service available here at TFNN.com. You see, tactics without strategy is a recipe for failure. And failure, folks, it's not an option in our playbook, which is not to say that we don't incur losses, because losses, well, they're a part of any successful trading strategy. It's what we call spoilage, just as running a household means throwing out food that's gone bad in our refrigerator. But to limit our loss, in order to control our risk in trading, we always use stops. And that means we have an exit strategy, one that covers both sides of the trade, which we refer to as a technical term as a bracketed order or OCO order. One cancels the other. And if you use a system like this, you won't ride the market down as many did from 2007 to 2009. So today and every day, let's do all that we can do to think like a strategist, because strategist, you and I, will slay the tactician all day long. So let's take a moment. Let's review one of our tools, one of my favorite tools. It's a tool I call, hey, don't waste a good mistake. Learn from it. Picture this. You're in the midst of a war, a battle between the limits of a crowd, seeking the surrender of your dreams and the power of your true vision to create and contribute to heights that only you believe in. It's a fight between those who will tell you what you cannot do and the part of you that knows and has always known that you are more than you are, and that your dream, backed by an unrelenting will to attain it, well, it's truly a reality, which is simply an imminent arrival. And thank you for arriving here at TFNN. You know, together you and I will make the impossible possible, because impossible to us is simply spelled I am possible. Yes, folks, you will attain your dreams, and if you make a mistake along the way, just learn from it and continue to move forward. You see, those who seldom make mistakes seldom make discoveries. And progress, real progress, is made by correcting the mistakes made along that route of progress. That's right. You make progress by making mistakes. And never forget that our mistakes won't damage us unless we let them. True story. Persian rug artists stand before the rug while a group of boys stand behind the rug to pull the thread after the artist starts it. If one of the boys makes a mistake, the artist adjusts the pattern accordingly so that when the rug is finished, no one can really tell where the mistake was made. It's that same kind of adjustment that can take place in our lives so long as we let go of that mental thread of each mistake and instead let the universe weave it into the success that you and I are. Folks, always remember that sorrow looks back, worry looks around, but faith, folks, is always looking up. Life is looking up for you and I. It is Wonderful Wednesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Out here right now, we've got the Dow futures up 37 points. Are trading at 16,714. S&P futures down 4, trade at 1939. NASDAQ futures off 7 points, trade at 3787. Russell 2000. Down 8 points. We'll lead the charge here. King Dollar. How about King Dollar? Back 200 ticks this morning. It's down 20 cents, trading out at $80.18. Why isn't gold on the rise? something to think about. It's trading down $5 at 13.16. Silver's off 10 pennies, trading out at $20.93. Light sweet crude up 15 cents right now, trading out at 106.18. Our calling number is 877-927-6648. Happy to field your call. Give me a call here. We'll look at your stock chart. I'll answer whatever question I possibly can. A quick peek across the globe out here. We look across the pond, the Atlantic over to Europe. We'll see the DAX is up 77 points right now. That's the German index out here. It's trading out at 98.60. FTSE down 63 points, about 1 full percentage point as we speak right now. A sea of red in Asia last night. The Nikkei off 109 points, 0.75%. Hang Seng down 13 points, and the Shanghai off 8. So where do we begin our day? We've got a number of new listeners this morning, and over the course of the next several months, because of a strategy, not a tactic, because of a strategy that I personally employed here for TFNN, for the benefit of TFNN, we're going to have a substantial number of new tigers and tigresses. It'll yet be another vision that I've had of something that seemed impossible made possible, and was all done by creating a strategy. In fact, it was a result of not wasting a good mistake. Same type of strategy that I used to help me get retail locations at Disney World, Disneyland. The Disneyland Castle, for goodness sakes. Universal Studios, Man Chinese Theater, all the major casinos in Vegas. Yes, folks, strategy versus tactics. We need both. Now, in technical analysis, we use swing points to measure what a market is doing. That becomes our area of measuring. You see, swing points are nothing more than a major intersection. So if technical analysis is new to you, what I want you to consider, I want to link the known to the unknown. It's the easiest way to be able to learn anything out here. And it's the equivalent of the streets that you drive on each day. When we take a look at a stock chart, we're going to go take a look at the streets that we drive on each day out here. In fact, we'll start off, we'll take a look at the S&P futures out here. And we'll be taking a look at the swing points. But for many of you, when you're driving, maybe you're driving to work or what have you, you know that there's certain intersections at certain times of the day that are going to experience heavy traffic, even though sometimes you don't know why. For example, if you've ever driven through the Orlando area, you would know that at the Fairbanks curve, it almost doesn't really matter what time of the day it is. It's one such intersection where you're going to see traffic out there. If you're going to Tampa, from Orlando, it's where I-4 runs into I-27 or 275, or where I-75 runs into 275. You're going to run into congestion in traffic. You've got those same places in your area. Well, the market has the same type of intersections, and we refer to those intersections as swing points. Now, once you clear those areas when you're driving, just like that, those traffic congestion spots, it's pedal to the metal, it's clear sailing. And then you're off to your destination. Well, we determine the destination of where price is going on a chart by using those same swing points and using different tools to make measurements from. Oftentimes, we'll use the lightning bolt pattern, what I refer to as the A to B equals CD pattern. Or sometimes we'll use Fibonacci numbers, expansions, or retracements out there. It happens to be a mathematical set of numbers that is like magic out there, where price typically gravitates to. And when we use these projections out here, they're guidelines. They're not exact. Oftentimes you'll see these numbers almost hit exact. Sometimes you'll see them hit exact. And when they hit exact, you just kind of shake your head. And the reason why you shake your head is because these patterns are advanced patterns, leading indicator patterns. We control these ahead of time. And when they hit, it's just simply, it's amazing. So amazing that when you do it as often as I do, a couple hours a day, well, it's more than a couple hours a day, you start applying these things to a stock chart and you see what's happening, you realize that these are important tools, important tactical tools to help us understand where the markets are going. So now, let's go back. Let's take a look at the ES Mini. Let's take a look at the daily chart out here. And right now, the swing point that the S&P futures want to travel down into, the very first swing point, and we're going to take a look at a stock chart. That means we're starting on the right-hand side. You've got the ES Mini trade at 1937, 1938, right around that area. And you're going to go back to the left. And we're going to look for, in essence, kind of minor intersections and major intersections. The minor intersection, its most recent swing point, took place here on June 16th. June 16th, the market had moved lower for about 3 or 4 days, made a low, then moved higher. That swing point's going to release information to us. On that trading session, by the way, in the ES Mini, there were 1.5 million contracts that traded. Yesterday's volume on the way down, about 1 million. So we came off of the high the day before. There was volume of 1.1 million. So it wasn't like it was a ton of volume if we take a look at the futures contracts out here. But this is an area where you're going to see a test. Now, the bears, what they're going to try to do is they're going to try to break that intersection. They want to break that intersection to have clear sailing to go down to the next intersection out here. So if, in fact, price falls below the low of that swing point, that major intersection, 1919, what that's going to set up is the next major intersection that we would look for. Where does that take price? Well, if you take a look at the real next major intersection, that's going to take you all the way back here to April 14th. At April 14th, you're looking at a low of 1803.25. There's another little junior intersection here, and that took place on May 15th. And that would really be the first area where price would try to gravitate to, and that's anywhere between the 1888 to 1859. Now, does price need to get down there? No. First, what it has to do is got to break through this congestion area. First, it's got to break that swing point from June 16th. And if that area holds, well, then we're either going to have a market that does move sideways. See, markets do one of only three things. They move up, they move down, or they move sideways. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures off 40 right now. S&P down 4. Let's go take a look at the S&P 500 chart out here. Let's put this up on the screen. Yesterday, I don't recall which is our second hour out there. We were taking a look at the price action as of last Wednesday, June 18th. That was Janet Yellen Day. And if you were a subscriber to my newsletter service, you would have known that the very next day, the question was, because everybody in the market was celebrating as if it was the initiation of a new move higher, I had enough indications that said, no, it wasn't an initiation move, it was an exhaustion move. And it was really the next 3 trading sessions. This is what I covered here yesterday before the market actually sold off. I said, when we take a look at this price pattern behavior, these 3 small-bodied candles that began June 19th, June 20th, June 23rd out there, that very likely what this was doing was confirming for us that this was an exhaustion move. It was exhausted. You see, initiation moves take place at a bottom. They don't take place during the middle of a move higher out there. At least they typically don't do that. And what I did was I just simply went back to a previous initiation type move that occurred that was very similar in looks to the one that we were looking at, which took place right here. This was on the trading session of March 4th. March 4th, we had a similar type of a move higher. We had 4 small-bodied candles out here that was really communicating to us that the market was simply tired. It was exhausted out here. And then what you had was this little key reversal session that took place on the trading session of March 11th out there. Now, the market only pulled back slightly. It pulled all the way back down to 1852 out here. Pulled back to where? Pulled back to the last swing point. That last swing point out here, this little junior swing point, that was March 3rd. So when we did the opening, we said swing points are important. They're important measuring tools for us. When you break a swing point, price typically wants to go down to the next level. It's like riding an elevator on the way up, on the way down. And those are areas. And sometimes you're going to do a retracement. You're not going to do what we refer to as a 100% move of a move, which means you're going to go back and actually visit that price area. It's not that complicated. So right now, what we know is that yesterday, by the way, was also a key reversal session. Now, the difference between yesterday's move and this one back here in the middle of March was there was another pattern that was also completing out here. If we expand it up, if you take a look at the bottom of my screen, it's a momentum index, referred to as the relative strength indicator, 14 period, which means we're averaging price over the last 14 days out there. And what's interesting about this pattern out here is the S&P made a high, did it on the trading session of June 9th out there, had a nice high relative strength reading. Went ahead and made a higher high yesterday, but it did it with what? It did it with less relative strength. When you make higher highs with less relative strength, not a good thing. That doesn't mean that it can't resolve itself, but when you get a reversal signal, and a key reversal session is a reversal signal, that's bad news. Now, that bad news says, just as we took a look at the ES-mini, the S&P futures, that says the first stop down is going to be this June 12th area. And that's anywhere between 1925.78, the low, and the high of 1943. If price breaks through that area, that offers the promise of moving all the way back here to the level of April the 11th out here, April the 11th, April the 15th, in that range. If we take a look at retracements, if we go from the low of April 11th all the way to the high yesterday, we're going to see 1, 2, 3 different retracement levels that we want to be paying attention to. If, in fact, you see price break below the June 12th area, well, the very next move, the very next elevator floor where people are going to get off is going to be at 1909, right around 1909. That's referred to as the .382 Fibonacci retracement level. That's a 38% retracement of the price from the low of April 11 to the high of yesterday. That also happens to run in the 50-day exponential moving average. That's a little red squiggly line going across my screen out here. So that's also in the 1909 area. One should expect that to be the first level of potential support out here on a continued move lower. If we take a look at expansions of swing points, so we're going to use that same Fibonacci, but we're going to use, instead of the retracement or contraction, we're going to look at expansions. Now, expansions, we're going to go from the June 12th low all the way to the high that was put in here yesterday. I'm going to move this around, so all we're going to look at are just simply the expansions. And what you're going to see here is the 1.272 expansion of those sets of swing points out there take us in the price range of 1914. So the area where you would expect to see the S&P move down to, if it can break through that 1925 level, it's going to be somewhere in the range of 1909, 1914, because we've got a conjunction there. We've got a natural Fibonacci retracement. We've got a natural expansion number getting together right there. 877-927-6648. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 3 points, S&P down 1, NASDAQ Composite off 6, Russell 2000 down 4 points, leading the charge on the way down. New York Stock Exchange off 5. Goldilocks is back 3. Silver down 7 pennies out here. All right, so we covered the larger time, or the daily time frame charts out there. Now let's go take a look at some intraday charts. Intraday charts, let's take a look at a 30-minute chart. So we were taking a look at that the daily chart yesterday. We took a look at the S&P 500, making higher high, using that relative strength indicator, was making it with less relative strength, giving us a reversal signal yesterday. Of course, we pointed that out inside the futures charts, I believe inside the Dow futures charts, which had given us a signal earlier. Now, I'm going down into a 30-minute chart. You see, the market's going to breathe. It's going to move up. It's going to move down out here. If we take a look at a 30-minute chart, we're going to see the exact same pattern, only on its time frame. Only it's going to be the reverse. We're watching price had moved lower. So after the GDP numbers or whatever it was that was released at 8:30 this morning out here, what we saw price move lower, meaning if we take a look at this 30-minute chart here, we're going to see the relative strength indicator reading down at the time frame of 3:30 yesterday afternoon. Well, actually, let me tell you what that is. I need to put that up on the screen here. Where's the data series, the box? Where's there? Show the box. Okay. I was on a different screen out here, but I'll tell you what that actual reading was. And I'm using the same 14-period relative strength indicator out there, and came in at 25.82. That's measured down here. So anything below 30 starts to get into a oversold condition. What did the market do from that point forward? Really just move sideways to do what? To work off an oversold condition. Market's going to do one of two things to work off that condition. It's either going to move sideways or it's going to move higher. And that's really what took place in the overnight session. However, after the release of those GDP numbers, we watched the market spike lower. Now, it spiked lower. Spiked all the way down to this is the ES mini, so it's the S&P futures that we're looking at. Gets down to a price level of 1937.25 out there. As it gets down there, the relative strength reading was 30.55. So 30.55 versus the stretched reading back here yesterday at 2:30 in the afternoon at 25.82. So you got a lower price, but you have less weakness out here. And now this next 30-minute session is very important to us to signal whether there's going to be what type of bounce it is that we would see inside of the market. Normal breathing pattern out here. And what it's trying to do, it's trying to form a bullish reversal signal. It's trying to form a bull sash, bullish engulfing candle. But I really won't know until 10 o'clock. So we've got to wait another 23 minutes to see what kind of candle forms out here. But it is trying to form a little bit of a bottom, a little bit of a bounce. And that's what's going on the intraday time period chart out here. That's on the 30-minute chart for the ES Mini. Let's go take a look at some things that are moving and grooving in the marketplace out here. Let's take a look at leading the charts the upside. We've got Hanes Brands. HBI is the ticker symbol out here. Let me see what is behind this move. Hanes Brands to acquire France's DBA Apparel for $550 million, and that is moving to the upside, up 9%. We'll take a look at that here shortly. Monsanto, MON is a ticker symbol, up a nice 6%, up $7 and change. They just announced a $10 billion stock buyback. We'll go see if Monsanto is at the highs and if they're buying back. So let's just do it right now. Is Monsanto at the highs and they're buying back their own stock at highs out there versus buying it at lows? In fact, they are. And in fact, they are. What the heck who the heck is the CFO of that company out there? Where the question is, were they buying it at the lows out there? The CFO, the CEO. Yeah, we're not at all-time highs. We're pretty darn close to it. If you take a look at the all-time highs, you come back to June of 2008. So these guys have decided that of course, on one hand, they can go out there and they can borrow money pretty cheaply, right? So they can borrow money cheaply, and so they say, hey, I'll go ahead now, use other people's money to do that. And it looks like that's what Monsanto is up to as we speak right now. You got Pioneer Natural Resources. That's jumping up here. That's up $9 and change. It's up 4%. PXD is a ticker symbol. You've got no news really behind that. You've got Aerie Pharmaceuticals, AERI is a ticker symbol, up $8. Looks like they've got a phase 2 results that look pretty positive. This thing is taking out swing point highs. Now to the downside out here, Marathon Petroleum, off $7 out there. That'll probably put a little bit of a stinger inside of the XLE, it's inside of the energy sector out there. And that really took a move to the downside yesterday with volume. Valero Energy, VLO is a ticker symbol, off 9%, off $5. Phillips 66. Look at this, all energy stocks to the downside here. Phillips 66, Tesoro, Holly Frontier, PBF Energy, Delek US Holdings, Western Refining. Let's go take a look at the XLE. Let me switch over to a different chart out here, different tab, I should say. Let's go take a look at the XLE. It's like no bounce under. Well, I don't know what it is. It's up 13 cents. Well, I take that back. So you've got some individual stocks. So it's not ExxonMobil, Chevron, and Schlumberger that are pulling it down out here. So let me go back to these individual stocks. Let's go take a look at what is going on out here. So let's take a look at first leading the charge to the downside. Let's take a look at Marathon Petroleum. Let's take a look at it on a daily chart. Let's go see what it is doing. MPC is the ticker symbol. Let me pull this back here. So gapping down this morning, doing it with some volume out here. So far, volume 1.9 million shares, taking out a swing point. So remember the first couple segments there, we were taking a look at swing points, natural area for price to gravitate to. Well, guess what? It just cleared that congestion area. That congestion area happened to be really a whole set of swing points. So here was in essence, a version of a consolidation. But what it's done here this morning, it's down below, looks like all of the swing points coming back here to the time frame of February 6, 2014. And that only had 2.6 million shares. So there are problems in River City for Marathon Petroleum. MPC is the ticker symbol. We can't see on the daily chart out here, the bottom of my chart, the little blue squiggly line, that is the relative strength indicator out here, and that is moved into a oversold condition. Let's go see if we can find a high volume bar where this is likely going to try to travel to. Well, now this is below all of these other swing points, and if it does close today below the February 5th low, which, by the way, that's $80.68, really its next set of swing points take you back maybe into the price area of about $68, but more likely, this little hammer candle all the way back here in October of 2013 down to about the 61 level. That is on Marathon Petroleum. Does not look good there. If we take a look at Valero, VLO is the ticker symbol. We'll see that Valero also gapping down here this morning. Valero taking out its most recent swing point, so this would create an A to B equals CD to the downside that we can draw in here. Its swing point being the trading session from June the 11th. 7.2 million shares are down there so far today. It's done. It's done 6 million shares. Man, there is some problems here on Valero. Let's take a look at the A to B equals CD pattern out here. So this has gotten stretched to the upside. Now it's going to get stretched to the downside. Now the A to B equals CD pattern, what we refer to as the lightning bolt pattern, it's already gapped down into the 1-to-1 area. That offers the promise of much lower price out here. That price projection was at 51.19. It's trading at 51.30 as we speak right now. But so long as it stays below the swing point from June the 11th, That low is 52.75. You will see Valero with lower price out here. And we use these A to B equals CD patterns to help us project price out here. This one's projecting to move down into the 44.25, 46.90 area. What I want to do is take a look at the next major swing point that had any kind of volume, was all the way back here in February. So it looks like that's really where it's headed to. So you've got a 1 to 1.618, A to B equals CD to the downside, as well as a swing point with some decent volume back here right around the February 5th, February 6th time frame, right around the area, you'd have to say, of 45.90 up to 47.74 is likely where Valero, VLO, is headed to. Let's go to Jerry in Nashua, New Hampshire. Jerry, thanks for calling. Thanks for holding. How are you doing today?
Good, yourself?
I'm doing excellent. Thanks so much for asking. You wanted to take a look at Great Panther.
Great Panther. Yep.
Tell me what you're doing and how I can assist you.
Well, I was looking for an entry point. It looks like there's a lot of activity with Great Panther lately on the upside with some volume. So just wanted to see if I could, if now would be a good time for an entry point, or what you think would be a good time.
And what's the time? What's the time period you're looking at holding on to Great Panther? What type of a trade is this going to be for you?
I think it'll probably be a little bit of a longer time, but yeah, I'm not talking about years or anything like that. Maybe a couple of months or something like that.
Okay, all right.
Try to kind of turn the trade, make a few dollars.
Okay. So great. So that's wonderful. And the reason I asked is because if you had said I would give you a different answer if you were saying a longer term trade than something where you're just looking to be able to make some money off of it. So more of a shorter term
make
trade.
Some money off of it. Shorter term.
Okay, so if we take a look at if we take a look at the Great Panther out here, let's look at what it has recently done. So price here traveled all the way back to its most recent swing point. So what we're looking at, Jerry, is if I look at the stock chart and I take a look at the February 18th level, it had some nice volume out there. It got up to a price level of $1.38. Price moved all the way back here into that range, into that swing point back on 19th, so just a few trading sessions ago. And then the very next trading session, it created what's referred to as a key reversal session. And that kind of is an indication of, okay, I've had enough. I've had enough up here at the highs. I'm going to go ahead and move a bit lower. And in the case of Great Panther, your ideal buy where you would start looking to take a position on this is, and you identified some volume out here, and the question is, will Great Panther move all the way back to the most recent area where it broke out from? And where it broke out from, where you started seeing this having volume, was in the trading session of June 16th. Now, so far what it's done here this morning, and it's done for the past two sessions, is the high of that candle is $1.17. And that level has been tested. That has volume there of 1.8 million shares. The move down into it on June 23rd was only 587,000 shares, and the move the day after was 841,000. So it's possible, if you're going to try to build a position inside Great Panther, what I would suggest that you do is maybe take a look at a trading strategy that says, okay, you could start building a position. Maybe you take a look at a third, and a third. Maybe take a look at a half. Or, depending on how conservative you are, maybe you wait and you do 100% of it, but you do it at the actual breakout area, which is right down around the low of $1.04 or so. So $1.04 to right now where you're at is the price range where Great Panther is likely going to travel within. I will tell you at $1.01, it has a new market profile, and that should act as a pretty decent support area, and that takes you right back to where it had recently broken out as well. And that's how I would take a look at that trade out there. And what you're going to want to see it do is the next time on the way up, you're going to want to see it clear the June 20th high. You're going to want to see it clear with more than 3 million shares. If it doesn't clear with more than 3 million shares, then this thing just may be traveling sideways into consolidation. And the bottom of that consolidation where you would be looking at adding, Jerry, that happens to be right around the lows of around 92 cents. So right now, all this has been doing since the time period of February of 2014 has been traveling between about 90 cents up to the high of about $1.30 or so. And that's a nice little consolidation range that you can make some money off of. So the bottom of that consolidation information range is another way to play it as well. Now, does that information help you?
Yes. So the bottom line is that we're looking if we're going to get any significant movement. So there's a range, there's a trading range. But if we're going to get any significant movement, that June 20th high on more than $3 million, clearing that June 20th high on more than $3 million would be an indicator of a breakout, right?
It would be. In fact, what that would do is that would give you a price projection. So let's assume that it does that. And what I'm doing here, Jerry, is I'm going down to May 29th. I'm going down to the low there. That's going to be my A point of the lightning bolt pattern. The B point's going to be that June 20th level that we just took a look at. And right now we'll use as a C point out here the low from June 23rd. And so if it doesn't move down below that area of $1.14, the 1 to 1 A to B equals CD takes you up to about $1.59. I would say if it breaks that area and it doesn't move any lower, you're more likely looking at about $1.72 as the range out there. But your stop on any trade right now would need to be below probably the consolidation, which it takes you all the way back to the 88-cent area. So, the way to do this, the way to set up your trade, the way that I suggest that everyone set up a trade is the only thing that you and I can control is risk. And so you take your trading capital that's available in your account, and you don't risk more than 1%. So let's just say it happens to be $100,000. So 1% of $100,000 is $1,000. $1,000 is all you're going to risk on the trade, and then you would take that $1,000 and you divide it by your stop. So that's the difference between where you're going to enter it and the bottom here, maybe 88 cents. And say it happens to be a 20-cent stop. That would say you could buy 500 shares of Great Panther. I hope that helps you.
All right. Thank you.
You bet. That was Jerry in Nashua, New Hampshire, and that was taking a look at Great Panther Silver. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's up 37, S&P is up 4, NASDAQ is up 9. I need to go back to my math there. So, Jerry, I hope that you are still listening. So we were doing position sizing, folks, is one of the most important aspects of trading out here. It's really, this is a money management game. That's all that it is. And proper position sizing says, hey, I don't need to risk more than 1% of my working capital. And risk is about taking, and we use this as the example here, on a $100,000 account balance, 1% is $1,000. That's all that you're going to risk. That doesn't mean that's all that you've invested in the stock. That's all that you're going to risk. So in the case of Great Panther Silver out there, if the stop was 20 cents, that was just simply rounding out here. I said he needs to put a stop below 88 cents. And I also suggested maybe he takes a look at scaling into a position. But you're going to scale in a position. You say, oh, I'm going to risk $1,000 on a trade out here. If we took that $1,000 divided by 20 cents, I said 500. $1,000 divided by 20 cents is 5,000. That's how many shares he could buy. Then you take a look at the 5,000 shares. You divide it by you multiply that right now times $1.21. You're at about $6,200 or so in outlay of capital out there. So it's only 6% of your total working capital out there. Hey, no problem at all. When you take a look at individual stocks, you don't like to put too much more than 10% in any one individual stock out there. So then you either reduce your stop, and I don't really suggest you do that, or you reduce your risk. Instead of risking 1%, you could risk 0.5% or 0.75%. So in this case here, Jerry, if you're looking to scale in 5,000 shares on a $100,000 balance, if it's $10,000 in your account, then you're looking at the 500 share lot out there and scale in accordingly. Now, before you do that, one of the things that you need to also be aware of here is if I take a look at the GDX. The GDX is the entire basket of market gold vectors miners out here. And if we take a look at what the GDX did yesterday, a couple of different things out here. Number one, it formed a new market profile. Market profile is a mathematical way to help us identify. It's another tool that we use to identify areas of support and resistance out here. Now, just like we took a look at inside the S&P 500, like we looked at inside the ES Mini, what the GDX did yesterday was it also, and the XAU did it, and the HUI, so whether it's the indexes here or whether it's the ETF structure, what they also formed yesterday was a key reversal session. So that is also important. That's another indication here that the overall miners may go ahead and retrace a bit. And it's not typical. Not that it couldn't happen, but it's not typical that you would see Great Panther move higher with the GDX moving lower, the HUI or the XAU moving lower. It can, but it is something to be paying attention to. Now, inside the GDX, if we take a look at its new market profile, the support level is 25.39. And if you see price get below that, 25.39, that probably suggests, number one, that the GDX pulls back to its most recent breakout area. That took place on the trading session of June 19th, more likely the June 18th area. The low down down there is right around the 2403 type range. Now, in order for the GDX to break out, really, it has to break not just above its market profile resistance high, its unfair high out here. It really needs to break above yesterday's bearish engulfing key reversal session, and it had engulfed the prior two sessions out there. It is something absolutely worth noting out here. In addition, we took a look, let me see where we're at in the markets right now. We had the U.S. dollar index was back 168 ticks, down 16 cents, and Goldilocks can't move. And so what does that mean out here? Because normally the U.S. dollar, we're out of time. The U.S. dollar index is going to correlate real well to the movements in gold and silver. Hey, folks, it is Wonderful Wednesday. Thanks so much for joining us. Have a great Wednesday. I look forward to seeing you tomorrow morning, or perhaps in just a few. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.